is a good setup for market maker sell model down to external range. So we could be looking at that sell side and then the PM sell side from yesterday. With the Judas swing in the morning, if you see SMT, that also qualifies as the Judas swing. Obvious Judas swing from 930, right? Trailing all the way up, taking out the buy side. I mean, as long as we can close past this SIBI, a tiny one down here too, then you could be looking for that sell side. I have this sell side marked out. So now we're displacing through that BISI like we wanted to see, right? From a retracement leg into a gap here, that'd be preferred. Look at taking that as a stab short just for the sell side liquidity, selling off there aggressively. So really no entry there for the macro yet. It's important to remember this is technically a good sign in some sense because it looks like it's starting to become high probability. So if you miss something like this, right? Like if you had that limit order up there, or if I'm waiting for this gap fill, or even to tap into this order block here. If we don't get that and price just dumps off all the way to the sell side, that increases the probability that 10 a.m. will be higher probability, right? So either it can reverse or retrace. So by the way, I prefer if we trade back up into this inversion order block here. I wouldn't be looking at a 10 a.m. reversal. The reason I wouldn't be looking for that is because we just swept out the highs on ES. So it wouldn't make sense that ES was to sweep out the highs, come back down, and keep purchase the low, and then reverse back up to the highs within the same 30 minutes. So we're trading up there into the gap, not watching that. So there's your negative order block hit. So you can use order blocks and inversion order blocks to kind of precisely, limit in, limit out. So if you have a larger gap like this, I would say look to the left of it. If there's an order block that dips next to it, you can use that order block range. If there's an inversion order block, you can use that. Obviously, if there's another inversion gap, you can use that as well. So there's a couple different things you can use to kind of market in or limit in right at the highs or right at the lows. But obviously, if we see a market maker model, we're going to be retracing into a period in the range premium or discount relative to the closest swing high and swing low. So you can see we just tapped into premium there. And we have this larger gap. So we could actually see a retracement off this low. So I would be very careful. After we sweep that low, we could see a retracement right at 1020-ish, depends. So that would be your retracement leg right at 10 a.m., right? Back into this larger SIBI right here. Now, preferably past this tiny portion, we should see speed if you want to see the low. There's really no gaps besides this tiny one that we wicked into. So nice large down closing candles. Now watch how we respect a little bit of this BISI, or we can shoot through it, wick back up into it, and then come back down. And we pierce through all the way to the sell side. So there you go. There's your 950 macro played out basically just as expected. Watch how we wick back up to there now. Don't get worried if we see something like this where we're barely missing that limit order, because I would have actually preferred right at 950 if we filled that order block as well, tapped into that 2-minute gap and sold off. That would have been optimal entry, right? But when you see something like this, you have to stay solvent and it's rational, and you understand that 10 a.m. then becomes high probability. Didn't I say that right? 10 a.m. has a higher chance of retracing. It'd be weird if we reversed at 10 a.m. because ES just took out their highs, right? And if you look at 10 a.m. here, this is like a perfect B classification. If you're familiar with the PDF, sweeping out highs at 940, low risk entry at 950, right up into this breaker actually. And then retracement entry given at 10. Isn't that just perfect? 10 a.m. right there. Completely out of the position there. I'll share it to predictions chat. I entered one here on this order block. That was actually a perfect entry. I wasn't expecting that. Wicked up perfectly to that version order block. Came back down, trade up into here. I trailed my stop too tight. I thought the retracement at 10 a.m. was going to be into this range because we have a tiny gap here, but I trailed too tight, got stopped out. But after I saw this bearish close back down, I re-entered with the same thing. If you look over the 15-minute chart, this gap in here on the 15-minute chart was not efficiently delivered. Right? We have wicks back and forth. This may be efficiently delivered up to here. Maybe up to here if you want to mark it all the way. But these wicks are not filling the gap completely. So if we extend this out, there's that wick into the unfilled portion. which is why I told you if you're going to hold runners, it's either, you're going to be watching ES or we're going to bounce off this. That's why I fully close out the position. Why do you discuss the 1030 macros and the next one at 1050? So I guess technically it's not a macro, right? So 1030 to 1045 is what I'll mention a lot of times. It's not like an ICT sanctioned macro that he's specifically given out, but 1030 is right when the London close is for Forex and for indices. So right around there, a lot of times what you'll see is these price movements like we saw yesterday that are very, very similar to a macro, and you can find them a lot of times during a high probability AM session. So whilst it's not like a specific macro that you see sometimes like in here, it's more of like a silver bullet sweet spot where you'll see macro signatures happen during that silver bullet time. And a lot of times between 1010 and 1020, like if you look here, like right on that macro close and 1030-ish, you see price action like this. Range bound consolidation. And then at 1030-ish, it starts to move right at London close. So that's why I don't like using this first kind of 20 minutes as an entry for silver bullet. Obviously, there will be times where we miss stuff like this. But for me, what I've seen is that 1030, 1045 is your highest probability of it playing out. Like if you look at yesterday, same exact thing kind of happened. And at macro time here, and then at 1030 here. See prices just kind of gyrating back and forth, multiple wicks back and forth, dips lower, 1030 hits, we see dip into daily range discount, went long there, and we ran up to the buy side. And then 1050 macro obviously is the big one, but this kind of macro signatures can be found elsewhere than the actual macros. But this is the sweet spot you'll see. Like if you study this, I have other videos on it on YouTube. So if you want more examples, and not convinced that this is an actual thing, which I completely understand. It's good to be skeptical. Would gap be a good entry? I think it's fine. We're right around discount. I didn't mark out any gaps here. No 5-minute gap. We have internal range buy side here. I'd be interested in. This here should also be used as an order block too, right? So I guess you could see this used. We're just slightly past. So watch how we respect this. That really should, I want to see a strong reaction off this. If we close bearishly and we start filling this lower gap, like these ones, this should be left open as a breakaway. I don't want to see it ever touch into there. I think that's too much of a retracement for us to continue up, especially since we got this close to the high. I want to see this left completely open, preferably. And then this one, if we only have wicks, that's nice. If we close above it for this next candle, that's preferred. By the way, we should also treat this as inversion if we want to close above it. And we're treating that as inversion, right? Trading all the way through it. Looking good. Not bullish order block, but on a reversal, this is the up closing range you would be watching for CISD. So if we continue to close above this IVG, looking good, preferably above this range, then you'd see speed. Tapping into the premium end of the IVG. Screenshot this, send it over. But preferably you don't want to see this swing low taken out. That would be a market structure break. Breakaway left open, right? And wicks only kept within this BISI. Kind of surprised as well. Hopefully this buy side hits. It should hit. I feel like this one, I feel like is guaranteed. This one, pretty close. I feel like it also is solid. Especially since, I mean, we have a tiny gap here that BPR, that'll probably create some resistance, but there's acceleration up. Now this also should be used as inversion if we can close above it completely. All right, there you go. Inversion. We got order block here as well. There's your buy side run. Now watch that. I'm going to mark this out so you can watch how we respect this. Tiny Sibi in here. And trading up into it. It also technically was a breakaway gap, so we could just see speed. There you go. There's your buy side. Bagged and tag part 2. So this is why I like to use this little macro here as your live example. I think overall, pretty good morning session, right? I think that's more than you can ask for a CPI day, pre-CPI.